Good morning. Welcome to Market Monday. As holiday season is swinging into full gear, we hope you're able to spend some time with family or friends you may not otherwise get to see too often. Well, on Wall Street today, news of lower interest rates sent the stock market up. But then the expectation that these rates would be inflationary sent the market down, until the realization that lower rates might stimulate the sluggish economy pushed the market up, before it ultimately went down on fears that an overheated economy would lead to a reimposition of higher rates.
Would you believe this cartoon that Chad just read word for word is from a 1981 edition of The New Yorker? This pithy commentary on the financial news cycle or news narrative is by the celebrated cartoonist and satirist Bob Mankoff, and is important for three distinct reasons. Number one, the old adage, history may not repeat, but it rhymes. It's almost uncanny how closely this 40-year-old cartoon maps onto this year. Markets cycle, the economy cycles, the Fed cycle, seasons cycle, even events like the Olympics or the World Cup cycle. Cycles are part of the human experience. So we should be conscious of the cycle we're in and then explore the nuances within that cycle. That's why we always try to go beneath the headlines and tease apart some of the information out here.
Number two is probably the main reason we create these videos for you in the first place. Back in the 80s, news and media choices were more limited. Now that is splintered into literally millions of different media outlets, which has amplified the noise out there exponentially. We're not perfect and we're not always right, but we do try to cut through the relentless noise out there and deliver quality context and perspective to you.
And number three, maybe most importantly, is the principle of long-term investing. Long-term investing is a principle. Why? Why is long-term investing a principle? Is it because we're lazy and want to go to the beach? Despite the noise in this cartoon, despite the double-digit interest and mortgage rates, here are 30-year mortgage rates, and this is where the cartoon was published. And here's the S&P 500 stock market index since 1982, starting at about 100 and rising to around 4,000 today. Despite inflation, despite war, COVID, global financial crisis, Fed hiking cycles, hard economic landings, not soft landings, the stock market somehow found a way. We believe that's also a part of the human experience, that despite the cycles mentioned earlier, somehow, some way, the market eventually finds its way higher.
True, and that is all well and good, but it's easier said than done, especially when we're bombarded with narrative and noise and our minds are being hacked. Yes, they are still hacking our minds, causing us to be on high alert, anxiously awaiting the next shoe to drop. How much will the Fed hike at its meeting later this week? We don't want to be dismissive of the fortitude and the courage, frankly, required to stay invested in the face of uncertainty and fear we're faced with as investors. Going back to number two, that's why we create these videos in the first place, to provide some clarity and perspective about what's going on in the markets. So let's get into it.
Inflation. Tomorrow morning we get November's CPI inflation data. While Bob Mankoff could probably write another cartoon about the inflation narrative, let's take a quick spin around inflation land. Citi's inflation surprise index is at its lowest since December 2020. Yes, the past year and change has been an inflation surprise, and though it was stickier than I anticipated, it's proving to be temporary. Used car prices down again, now down a record 6 months now. Blue bars being the month-over-month change on the right axis, Yellow line, year-over-year change on the left axis. Down 14.2% is the lowest level ever after the peak of 54% in April 2021. Was inflation, now will be deflation going into next year.
Gas prices. We've all seen this. After peaking at a 65% increase year over year in June of this year, remember, to over $5 a gallon, now basically flat from a year ago. Was inflation, if gas is under $5 a gallon in June of next year, will now be deflation. Global food prices. After a peak of 41% year-over-year increase in global food prices, think it's enough to cause a repricing of the stock market and potentially a 1970-style runaway inflation? Now increasing at just 0.3%, we expect this to show up as a late 2023 and even 2024 deflation story. And here's a nice summary of those most watched supply chain metrics. You have commodities in blue, used cars, which we just looked at, in purple, supplier delivery times in green, gas prices again in orange. The black line is the average of all these components, which again just points to that cooling inflation story.
All right, coming up on the end of the year and it's market outlook season. Just as a reminder, as you start to see this analyst or that bank's 2023 market outlook, this Deutsche Bank survey shows at this point last year in gray, only 19% of respondents expected a negative return for the stock market this year. Now this year in blue, almost 40% of respondents think there will be a negative return for the stock market next year. Speaking of, where are we in the stock markets now? S&P 500 down 16%, NASDAQ still the laggard, down 30%, small cap Russell 2000 down 20%, and the Dow Jones Industrial Average down 8% for the year. We can see all four major US stock market indexes are down less than their max drawdown so far this year, with the S&P 500 and the Russell 2000 both 10% off their lows, NASDAQ up just 6% off its low, and the Dow up 17% off its low for the year.
And to wrap for the day, you also may hear about the Santa Claus rally, which refers to stocks' historical tendency to rally the week before Christmas. A couple caveats. One, like many other seasonal indicators we discuss here, seasonality is more akin to climate than weather. Meaning, while 50 or 70-year averages do produce these results, it's far from guaranteed to happen. And second, we humans have a tendency to create a heuristic from the original Santa Claus rally, extrapolating that out to include the entire month of December. But as we see here, not so. And in fact, looking at the last 71 years, the Santa Claus rally doesn't really get going until the middle of the month, around the 15th or 16th of December. Will Santa come calling this year? We'll see. Have a great week.